Hello, friends. Let's understand something important today. The share market. What is it? Why does it exist? How does it work? What are its pros and cons? And most importantly, how can you invest in it? Share market. What does it mean? You might have heard terms like stock market, share market, or equity market. They all refer to the same thing. It's a place where people buy and sell ownership, called shares or stocks, in companies. Buying a share means you're buying a small piece of that company. If the company earns profit, you earn a share of it. If it loses money, you also face a small loss. Let's take an example. Suppose you want to start a business but you only have Rs $10,000. You ask a friend to invest Rs $10,000 more, and in return, you both agree to 50-50 ownership. That's exactly what happens in the stock market, but on a bigger scale. Instead of asking one friend, companies ask people from all over the world to invest in their business. A bit of history. The idea of the stock market started around 400 years ago with the Dutch East India Company in the 1600s. They needed money to send ships on long trade journeys. Since it was risky, no single person wanted to fund it all. So they asked the public to invest. In return, people got a portion of whatever profit the ships brought back. That was one of the earliest forms of a stock market. Stock market. Today, every country has its own stock exchanges. In India, we mainly have BSE, Bombay Stock Exchange, 5,400 plus companies, NSE, National Stock Exchange, 1,700 plus companies. Companies list their shares on these platforms so people can buy and sell them. Two types of markets. 1. Primary market. This is where companies sell their shares for the first time, often during an IPO, initial public offering. 2. Secondary market. This is where people like you and me trade shares with each other after the company has already sold them. How are share prices decided? In the primary market, the company sets a price range. In the secondary market, the price changes every second based on demand and supply. More people wanting to buy, section price goes up. More people selling, Geisha price goes down. Sensex and Nifty, the scoreboards. To understand if the market is going up or down, we look at Sensex. Tracks the performance of the top 30 companies on BSE Nifty, tracks the top 50 companies on NSE. These indexes help you see whether the market in general is rising or falling. What about scams? Earlier, it was easy to cheat people. Fake companies would list their shares, collect money, and disappear. Because of such scams, like the Harshad Mehta case, strong rules were created. Today, SEBI, Securities and Exchange Board of India, regulates everything. A company must show verified accounts, get audits done, have at least 50 shareholders before listing. How can you invest? You don't need to visit stock exchanges physically anymore. You just need 3 things. 1. Bank account for your money. 2. Trading account to buy and sell shares. 3. Demat account to store your shares digitally. Most banks offer all-in-one accounts now. Retail investors and brokers. You and I are called retail investors. We invest using a broker, a platform, app, or bank that helps us buy-sell stocks. Brokers charge a small fee, called brokerage. Some charge 1%, which is high, while others charge as low as 0.05%. If you're buying and selling daily, called trading, lower brokerage helps. If you're investing long-term, then brokerage doesn't matter much. Investing versus trading. Investing. Buying and holding stocks for years, less risky. Trading, buying and selling quickly. More risky, needs skill and attention. Many experts do full-time trading, watching the market daily. Is it like gambling? If you invest without understanding the company, yes, it's like gambling. But if you study the business, its growth, profits, history, then it's a smart decision. A safer option. Mutual funds. If you're unsure, mutual funds are better. Experts manage your money and invest in multiple companies to reduce risk, just like in the old ship example. People used to invest in 5 into 6 ships, not just one. That way, at least one would return with profit. If you found this video helpful, share it with friends, comment, and tell me which financial topic you'd like explained next. Thanks for watching. See you in the next video.